Good morning, good morning, good morning. Everybody give me a hello in chat ask Boris. Let me know if you guys hear me okay. And I'm gonna share my screen. Okay, screen two. Krasi, good morning, Miguel. Good morning, everybody. All right, so everybody should have their eyes on the BK Trader Tools box, which you can access. I'm just gonna type in the keyword. And you should be looking at the Combo Alerts EXE5. This is the MT5 version. I don't have, the 4 will be coming. So this is the 5. But if if you have 5, or, if you have if you have a 5, even if you're trading on 4, but you have a 5 account that's a demo account, whatever, I want you to download this version. This is the final version. It's 1.30. Everybody sees the version in your tool set, right? Somebody give me a yes. Guys, hello? Are you hearing me? Okay, thank you. Thanks, Krasi. Thanks for me here. Okay, so before we start, which unfortunately it's the thing has already traded a trade for me, made money. But before we start, let's get the indicator on everybody's MT5 charts. So I'm going to go to my MT5 over here. Okay, and I'm going to delete this one because this is an old version. Because if you the way you can tell the indicators, you go into properties, and oh, this is 1.3. Why is this? Maybe I already put. I wonder if I put the new one. It doesn't matter. Hang on a second. Let me just make sure that I'm in sync here with everything. Combo alerts, properties, 1.3. Okay, yes. So I guess I already put the new one on there, but it doesn't matter. I'm gonna do everything from scratch. I'm gonna do everything from scratch. Okay, so control. I'm gonna delete this indicator. I'm gonna do it from scratch to configure it for you the way it should be configured. Okay, let's kill this for just 1 second. We're just gonna create the chart. So we're gonna start with a Dow chart, and then we'll just create a template and apply it to the NASDAQ chart. So I'm gonna launch Combo Alerts, okay, as an indicator. I'm gonna go full screen so you guys can really see it hard. And again, the version that you should be looking at is 1.30. That's the one, that's the version you want. So in this particular variant, I'm going to get rid of all the reversal trades. I'm just going to set them to false, so they're not going to be visible to us, okay? And I'm going to just tweak the visualization just a little bit the way I like it, because I don't like having multiple colors on default, the buys and the sells. So I'm just going to make them all one color. So the trend breaks are going to be black, and the dips, the moving average dips, are going to be orange. Okay, right. Now, the only other thing, the only thing I want to do here is I'm going to make require level control for my dip to be false. What that means, that's a very kind of a arduous way of saying that I only need the trend break to happen. I don't need the price to be above the trend break in order for me to get a signal in a dip. I'll show that to you visually. You'll see it again. And usually I restrict it to just one single signal. But for for indicator purposes, just for us for viewing purposes, I'm actually going to make it 3 signals, just to show you on the charts the value of these signals. So I'm going to just do that. It's going to be okay. I'm going to say okay, and in pops in my chart, And I'm going to save this. Oh, what did I just do? Damn, that's not what I wanted. Sorry, let me go back. Okay, I'm going to save this as, we'll just say dip view. Okay, and I'll apply it to my NASDAQ as well. So we'll just go to NASDAQ and I'm going to apply it to my NASDAQ. And then we can, now I'm gonna sort of show you all of the key changes were made that I think are going to be, clearly are going to be very, very good. And actually, you know what? I take it back. Let's so that there's no confusion and it's just really, really clear and crisp. Let's change the properties. Oh, I did one other thing. We need the entry offset. I'm sorry, my apologies. Entry offset should be set to 0, meaning that the trend break should be just at the high of the 3. There's no, we're not going to give it any wiggle room. And then for the dips, I just want one signal to make it clear, right? Now you see there's only one signal. So you can fool around with all the settings. You can see how how that all works. Oh wow, that's interesting. I just realized that's interesting that the okay, that's fine. All right, I'll okay, we try to see if there's any more if there's any more bugs in this thing. You see if it's a variant between the CFD. I think it's the pricing. Yeah, it must be the CFD pricing. Okay, so I'll show it to you. Unfortunately, as I always said, because we're CFD prices are gonna differ from futures prices, and a tiny little change in spread when you're trading on a 1 minute chart, it's going to create a variance in some of these arrows. That's just the nature of the beast. So nothing much we can do about that. But anyways, the basic premise that we're looking at as far as trades go is on the short side for shorts. You can see that when you're trading the shorts, you want to be in the trade early. Now, today happens to be a super negative day, and there was tremendous amount of short opportunity, lots and lots of long short trends, right? But generally, short trends tend to be short. That's actually a good way of thinking about it, meaning they're not going to be nearly as extensive as long trends. So with short trends, they tend to be short and they tend to be fast. So that means you really want to enter right at the trend break line. So here's a trend break line, right? Boom, you enter here, you get short, super easy. If you wanted to do a variant where you say, well, I'm gonna enter at the dip line where it dips into the moving averages, obviously over here, it's almost the same thing. It dips into the moving average over here. Here you can see the difference much more clearly. Here's the trend break line. This is a trade I actually took in my other account. So it took short, boom, boom, nice clean trade. If you wanted to do a different entry structure, which is the dip structure, the dip structure now is very clearly defined. It basically says you got to have two things. You got to have the couplet of candles, the two candle combination. The candle 1 has to be above the moving average. Candle 2 has to be below the moving average. That's on the closing basis. The closing of candle 1 is above the moving average, and the moving average is the fast moving average. Candle 2 is below. So you would get short over here. So obviously this is also a signal here, but it's later. And first of all, you have a little bit of retrace risk, and then obviously it doesn't have nearly as much of a continuation as the first one. So again, if you happen to catch a very, very long short trend, you know, that's great. And we're going to be able to make money on a multiple exit structure, because that's the last component that we haven't yet done on the algo, which is doing multiple exits on a big trade. But 9 out of 10 times, the bread and butter trade is just to take the short signal and, you know, take the short move here. So 1, 2. So the short side is very, very clearly defined and a very sort of a simple jutting, boom, boom, boom. Let me take those hits. I actually, hang on, let me see if I can log into my other account. I want to show you how good that worked. Let me see if I could do this. Just let me see if I can do it. I think I can. All right, bear with me a second here. Yeah, okay. So if you go into history, let me see if I can do this. Okay, yeah, I can show this to you just 1 second. I just want to show you, this is live trading in history. So ignore the blacks; those are just adjustments. But if you look at the trades, I'm trading with a 6 target 10 stop. 1, 2, 3, 4, 5, 6, 7, 8. One loser. I closed this too early, went to full 12. I closed this way too early, went to full 12. So you literally have like 9 out of 1. That's obviously not going to be the case always. In fact, it's never going to be the case permanently. But what's what's cool about that is, and hang on a second, let me just, I need to redo my accounts. Just a second, let me, because I'm testing all this stuff, and obviously it's okay, cool. Let me see if this is working. Okay, right. Yes, oh, great idea. So super good idea, Krasi. Let me do this right now. Let me do this right now for the settings. You're right. Let's just upload the settings so everybody sees the property settings. Okay, super great idea. Instead of me talking about it, let's take a screenshot of this. Okay. So this is, let me just make sure I have it all correct. 000 falses require false control. Okay, super. Let me just do this right now. Okay, so this is here. And actually, oh, I think, I don't know what I can do. I'm gonna do the screenshot for a second. Hang on, I'm gonna do a screenshot, but I can also do the set, right? I could do the set too. So hang on, I'll do both. So let me just save the screenshot. So this is combo settings. Save. And I will say save as dip settings. We're going to go, this goes in the indicator set. So we're going to call this dip settings, set, save. And you guys can apply both. All right, cool. Good idea. Let me do this right now before we even do anything. So minimize this and I will upload files. Those pictures, combo setting, cancel. Okay, so that's combo setting a picture, and let me just do the setting file. Okay, file, open data folder. MQL, indicators. No, it's got to be, it's in the settings. MQL, presets. Okay, dip settings over here. That's fine. Let me just do that. Hang on, minimize this. and we'll do dip settings.set. All right, cool, very good. So now you guys should have that. It should tell me if you're able to apply it, and if it's working. Okay. So this is going to give you a great visual view of the whole thing. So the short side is super clear, super easy. It just bang, 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 and you literally, you're hitting trades all night long. You can see it hitting here, especially in a strong downtrend market like we have today. Virtually every short break, boom, break here, break here was a little bit against you, but did not stop you out. You got short here, boom, made money. Short break here. It's all just cutting. It's extremely, as you can see today, was literally 10 for 1. That's a 10 for 1 on a 60% bet. As I said, those are ridiculous odds. They're just, they're not going to repeat. I'm hoping, I'm always hoping that it'll be 80. But obviously, if it's 70 or better, it's profitable, because at a 60% bet, if we're 70% winners, we're we're way ahead. If we are 80% winners on a 60% bet, we're really doing well. Okay, so does everybody understand what I'm saying? It's a 60% bet because you're collecting 60% of your risk. I'm trading it at a 6 to 10 on a on a break. My only hesitation as far as like kind of setting it to you for CFDs is I think CFDs you're going to have to degrade the risk rewards here because of the spreads. I'm going to achieve hits that you may not be able to achieve, or you just you simply have to trade with maybe like a 20-10 type of a target, and so there you may not be able to achieve 80, but maybe you can achieve 72, and that's still quite good, against the 66 break even. You have to experiment. I can't, it's a super short 1 minute time frame. When we go on the currency, which is really where the money is at, when we go on currencies, we couldn't care less there. It's going to be super easy to construct 60% bets, even 50% bets with high accuracy, because there we're going to be working on much more larger time frames, and much easier structures. So it'll be much better. Okay, who's messaging me? I'm in webinar. In webinar now. See the room. Okay, so that's the look on the short side. Let's go look at the long side. Long side is a little bit different, but no less interesting. Okay, so the long side has been changed to oh, sorry, let me just we don't have too many long examples today, so I really have to scroll backwards to find, because it's a very it's a very short bias day. But the long side basically is based on the following premise: into the moving average, out of the moving average zone. So it's got to drop into the moving average zone, right? And then close out. That's the couplet. That's kind of like the variant of the buy-sell couplet, right? Is everybody clear on that? Let me just make sure that everybody sees the step. Let me, this is a small example of this. I got to get big on it for you to, where is it? Okay. Here's it, you can see it in big. Candle comes in. So first of all, let's, in all these conditions, the trend break must apply. So here's trend break. Trend break applies. Now there is a more stringent condition that says not only must a trend break apply, meaning that you have to have a breakout candle, but also the dip itself has to happen at a higher level than the breakout candle itself. It means it's got to be at a higher low. That condition I've set to false because it really isn't necessary given the new nature of how we basically traded. Because the thing about the long side, the long side, remember, generally is going to be longer, meaning that the trends are generally going to be, since the stock market is much more upside biased, going to extend higher to the upside. So when you're looking at the long side, any kind of a retrace and a recapture of trend. Recapture of trend means that the price moves above the moving average. By its very definition, is going to be a positive signal. It's going to be generally a positive signal. And in fact, the reason I wanted to show you a couple of these arrows is because in a upside move, you sometimes have 2, 3, maybe even 4 positive signals that give you continuation trades. But in this case, let's just isolate on signal 1, which is our first signal. And we have a trend break candle. Then we're looking for the buy, the sell buy structure into the moving zone. So comes in underneath the moving average, comes out of the moving average. We get long over here, 35. That's our target, right? If I'm trading futures, I'm trading 610. So I'm looking for 41. This actually, on the CFDs, doesn't look like it may, it makes it, and it may very well, with a very, very tight stop, stop me out, right? So if I'm trading with a super tight stop, I could effectively get stopped out here on a -10. If you're trading with a CFD and you want to give yourself more breathing room, which is probably a good idea, you can trade with a 20 stop, at which point you survive this fake dip, right? And then of course it certainly goes to a full 10 in your direction. In fact, when you have a healthy, strong upside trend, you have a chance sometimes to make 30, 40 points in the uptrend. The whole idea in both setups is to catch the trend move early. As long as you have a small amount of evidence that a trend is really taking place. So moving averages crossover, trend break is in place. We have a in and out price action, meaning price action wants to run higher, not lower. It's not just curling over and dying out. All of those, that's all we are trying to do. And remember, all evidence is fragmentary. All evidence is not complete, and all evidence is certainly not 100% reliable. You're going to get false signals. But the point is, the earlier the evidence, what we're betting on is the probability that over 100 times, this evidence is going to be 70% correct, that it's going to give us an early entry into the trend. And therefore, all we're trying to do is hop onto the trend at the highest possible probability entry, and then see if we can ride it. So as I said, with a CFD, you're trading 20-10 probably to give yourself more room. You survive this dip. With the futures, you may have taken a dip out. However, what's interesting about kind of the futures construct, right, is even if you get stopped out, you could certainly come back and trade the second signal, because here you have very much the structure that you just on video. Okay, here you have very much the structure of the same idea. Below the moving average, above the moving average. So strong buys, continuation signal, you could come back here, for the second trade. As I said, today is a very, very lame day. I mean, you have a couple of decent examples. Here's another trend, early trend signal, right? Consolidation. We have lots and lots of choppiness, but ultimately in and out. This candle is below, this candle is above. We get long here. It's very, very small price action for 4 or 5 minutes, but then boom, boom. And this is what happens quite often in Asia, is because we're able to position ourselves essentially just before the liquidity buy, we can get the big move. And of course, remember that if we are lucky enough to have a 2 exit structure, then this becomes a very profitable move. Then we catch the multi multi-point move. And we only need to remember, let's imagine a situation that there's like 10 positive 10 trend breaks a day, right? We only need to catch two big moves a day to really pay for all the tiny losses, the small, the small wins, and just walk away with a with a very decent P&L on a day. Basically, become net positive on the day. We don't need much to really make it happen. And certainly within a day, there's generally always two trend segments that can offer us 2-to-1 risk. Actually, in this case, it's a 4-to-1 risk. Well, no, 2-to-1. I'm sorry. The risk is 10 points on futures. Let's say it's 20 points on CFDs. So certainly, even if it was 20 points on CFDs, you're coming in here at 27. Do you have 40 points worth of price action? And you definitely do. It comes all the way out here. Well, maybe not quite. This goes up to, what's the high? 57. So not quite. It goes to 1.5 times. And that's the other thing that you have to adjust. The take profit and stops have to be adjusted both for the session, the CFD, and the instrument itself. If I'm on the futures, I can trade with a tighter stop, and therefore I could probably probably a proper compromise between the volatility of the CFD and the accuracy of the future is maybe 1.5 to 1. So you would be trading with a 15 stop, right? Which means you're looking for a 30 target, which means you actually do have a 2-to-1. This is a 2-to-1 slice to the upside, right? You certainly, a lot of times, especially in a strongly short market, a lot of times have a 2-to-1 opportunities. This is a 2-to-1 opportunity with a 15 stop here, and then you have some really massive. This is basically 1 to 1.5 opportunity here, and this is just a 1 to 1/2. This I'm not. No, you'll be coming in over here, so it's not going to be a 2-to-1 opportunity here. But then here, this is a clear 2-to-1 opportunity. You get short over here, you don't even come close to touching your entry point, and as it starts to rally, you make more than 30, 40 points to the downside. So as I said, and this is not even, the day hasn't even started yet. You're still essentially pre-North American. You don't need a lot of these big segments, big move segments, to position yourself. The whole idea here is, can we position ourselves early? Can we take the smallest reasonable risk we can? That's really the big question. What's the smallest reasonable risk we can? Because you're going to get stopped out. And sometimes you're going to get stopped out 2 or 3 times in a row in a very choppy market. So you have to absorb that as part of the cost of doing business. And then, can we just put ourselves in front of positives? Can we put ourselves in front of luck when we have the strong trending moves? Because we know from price observation that there's always going to be a couple of strong trending moves during the day. And as long as we're early, we can come in. So what I was going to say, it's interesting here is, you see that this, for example, this was a long signal here that gave you a signal on the CFDs that was actually, they would have stopped you out, unfortunately, CFDs, and that just happens. You can't do anything about it. Ironically enough, on the futes, let me show you on the futes. It's hard for me to drag this. On the futes, because the pricing is different, the pricing was better. The signal actually came in over here, and you see my algo took the signal, and it was a super easy signal to the upside. So because this was not a signal on the futes, and that's just that's just the nature of the beast. Sometimes you're gonna get false trips into the thing. But regardless, the principle really does work. Even if let's say you failed over here, certainly you would have gotten. Let me just extend this combo to signals, to two signals per trend. And certainly, even if you missed on this one would have been good. You would have been in on this signal, and it would have been fine. But again, the more I look at this, you clearly need a 15 or 20 point stop here because again, the real signal, the future signal was over here. You see how because the CFD pricing, the high and low comes in here. And by the way, I think we can actually modify this. Okay, let me see if I can modify this because we can do what's called an offset. There's a setting here. I wonder if we can. I wonder if we can do the setting. Oh, who I need to mute? Somebody mute? Okay, very good. Let me see if I can do the setting on the EMA offset and ticks. Let me see if I do, just curious. If I do 3 ticks, is that going to be positive or negative? Yeah. So if I did it with like 3 ticks, right, you can see it forces the arrow to be truly through the moving average, right? None of this, bogus little thing. So it gives you a more accurate entry signal. You still would have messed up here because this candle really screwed you. The pricing on the CFD was grossly worse than the futures, and that's why I gave you a false signal. But the point being is that you could modify it to make sure that you don't get any false signals. You don't get a false break over here sometimes. As I said, this is always there's always going to be a problem on a 1-minute chart and never really a problem on anything that's going to be larger than 15 minutes. So it's fine. So as we're sitting right now, by the way, and today, by the way, I decided, guys, I am going to just narrate all my trades. Anything that's going to be a good trade, I'm going to call it. And anything else, I'm just going to call it out because it's going to be much, much easier for me to do this. There's just like basically no reason for me to try to pluck and trade. You guys know so right now, basically what I'm watching is the short setup in NASDAQ. If I'm trading on futures, I'm going to be trading this with a 10-6 stop. If I'm trading it with the CFDs, I'm probably going to trade it with a 20-10, meaning that I'm going to have a 20 stop, 10 target on the CFDs. So this needs to complete. We're looking for the candle to complete. Let's see where we're at. We have 54, 55 seconds. And obviously it's going to come in. So I'm going to come in at 63. So I'm short 63, targeting 53, right, on the CFDs. We'll see if we can, maybe might have to take a little bit shorter time. And the stop is going to be 83. And that's our, primary trade here. My futures already got done at +6, and now we're done +10. Okay, great. And that's, I think this is a much, much better way for me to trade because I can focus on the trade and not on the execution. You guys can focus on the execution. There's no reason for me to frigging trade, right? You guys agree? We kind of did this last week, and I actually realized that this is a much better way for us to communicate, right? Anybody take this short trade? I mean, we set that up. We knew it was going to be in, right? Okay, good job, Connie. It worked very well in the futures. Took my futures trades. Okay, I mean, that's fine. But yeah, it was a nice, clean 10-point trade. Where's Karen? Karen, are you in the room today? Where's Karen? Is anybody, is she gone today? I haven't seen her in a long time. Who's in the room today? Oh, Calvin, Grassi. Oh, wow. We're like, it's all guys. The ladies, it's just Cheryl and Connie. Okay. Anyways, Jonathan, did you do anything with the trade? Or did you trade ES? But anyways, the point being is you guys get the idea. It's just kind of much easier to do this this way. Let me just okay. So let me change my charts to US 30. That's correct. Yeah, US 30, and I want. What was the look that we did? It was a dip look, right? Dip view. Okay, and we will make it bigger so we can see. Okay, so by the way, there was the same principle on the Dow here, getting short the Dow. which would have had to trade with probably like a 30 stop and a 20 target, but regardless, the Dow worked as well. The principle here is making breakfast. Come on, it's prime time hours here. The principle here is momentum, short momentum. Short momentum is not about waiting. It's about getting it done. It's about getting into the trade, getting it done. Now, we've had a very, very, very negative day already. And clearly the tenor of the market has really changed. I don't know if you guys have noticed it, that people have already commented. For example, if you trade the last hour of NASDAQ, generally it's always been a positive, like it's been nothing but, if you bought in the last hour, you always made money. In the last 25 days, it's all been selling. If you sold at the beginning of the hour, you made money by the end of the hour. So there's just been, I think, a very big change in investor psychology. You need to be aware of it. And I think, clearly the negative bias is starting to take hold. But even if the negative bias starts to take hold, the underlying nature of how short trades work versus long trades still remains the same until proven different. Meaning that short trades are sharp sell-offs, long trades are long, continuous, languid extenuations. Because ultimately, the stock market is a long biased instrument, right? I'll show this to you in FX, you don't have that kind of a clear bias. FX is very much a two-way market where you could trade the long and the short, both through a trend break move or through a dip move, either way, with I would say little penalty for accuracy. But with the stock market, you really need to make that differentiation, and it makes a huge difference in your accuracy. I mean, it's certainly made it, like, since I demarcated, since I made Daniel change the algo into long only, short only, or both, the result, running into accounts, results have been much, much better because the short account has just been like money, boom, 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 boom. As a matter of fact, I'm looking right now. I think now I'm up to 10 out of 11 for the last few trades, which is remarkable. There's obviously, it's never going to last this way, but it doesn't have to last this way. It's just so long as the preponderance, so long as over 100 trades, I'm going to be 70 or better, and I'm really hoping 80 or better, or 80 out of 100 on the winning side, then my entry is a high probability entry. And then if I can overlay that rare but very profitable second leg, then that's really where the money is at. That's the gravy that we can collect. So finally, I think finally, the tweaks, the looks, the structures are all starting to take place, and we're able to come up with something that is functioning on a repetitive basis, almost 24 hours a day. Does that make sense to everybody? And obviously, I think the charts are much clearer, right? They're super clean and crisp. There's just no there's just no ambiguity of what we want to do, right? They're not cluttered. You can definitely see them. You can see them manually, and obviously the algo is going to take them non-manually as well. So the only final step for us from the algo point of view is a double exit. And once that's ready, by next week I should be able to give you guys an algo sample on the 5, and then we'll see if we can do the 4. It all depends on how fast Daniel can do the 4. I mean, the hardest part was getting the architecture right. So hopefully, once we have the architecture right, everything else becomes secondhand. But I'll say the other thing I'll say about all of this is, this has been a hard lesson for me to learn, but it's been a very good lesson to learn, is that, how they say you don't want to die a death of 1,000 cuts, right? Meaning that you don't want to take too many small stops, because small stops will be a death of 1,000 cuts. And actually, the answer is yes, you do. Yes, you do. You want to die of 1,000 cuts. And the reason why is because it's, first of all, it's really, really rare that you're going to get to 1,000 cuts. And if you have 10 tiny little cuts, I mean, this is a very gruesome analogy. So, I'm sorry if I'm going down this road, but like it really makes the point. If I have 10 little cuts on my arm, they'll heal, they'll survive. My arm will be fine. But if I freaking amputate the arm, which is equivalent of taking a big, big, big stop loss, right? I'm not going to get that arm back. Like, there's a much more terminal aspect to bigger losses. So even if it's just painful and annoying to take 3, 4 losses in a row because price action is just either just simply not going your way, or is too volatile and too jumpy. In other words, it's creating lots of right-wrong trades where the trade is actually right, but it's stopping you out on a wick, or it's stopping you out on a quick reversal, or shit like that. It's just an inevitable part of our business. As long as you don't deviate and slowly but surely just stay patient to the setup, you'll not only get all of it back, but you'll go right back into being positive. That it's easier to heal from 1,000 cuts than it is from an amputation. Jesus, I'm sorry for that. This is a really gruesome frigging analogy, but it really makes the point that small stops is the key to the success of this strategy. Does that make sense to everybody? Okay, good. So what is what's going on over here? Oh, I was like, why is the Dow not quoting? Okay, I guess it is quoting, right? It looks like it's quoting. The Dow frozen? They're just not quoting the Dow? This looks like the Dow is just not quoting for me. They're having a problem with the Dow. Huh. This is really annoying. Oh no, it's still, they're starting to catch up now. Oh, I guess they're having like this kind of a delay on the Dow quotes. Okay, it's finally starting to move. It seems to be like a delay and then a move, delay like a move on the Dow. Okay, so we don't really have any interesting setups. I mean, what's interesting is we could, if we get an orange arrow to the short side, we could legitimately try to trade the dip trade. But remember, the short side always works best with the trend break trade. So that's already worked for us very well, right? We had a trend break over here that we could have taken as well, but we were just busy looking at other stuff. That would have been another really good trade. We can take a look at this and see if it sets up as a dip trade instead of a trend break trade. But the other thing that I wanted to just look at is just look at currencies, and we can look at smaller timeframes, larger timeframes. Doesn't matter. We can just sort of show you how the properties of a different asset and how that plays, and then we can even look at gold and some of the other stuff that we want. The other thing that I guess we should look at is the German. Let's just do a chart on the German just to see what the German is doing. Okay, so let's do three-way. Here's the German. Let's apply our dip view to the German. Okay. And here you see how well, I mean, look at this. Buy here, buy here. The upward bias. And by the way, notice, I was going to say to you, notice this has been my theme. If any of you have been reading any of my stuff on 60-Second Investor, I'm a huge bull European stocks versus American stocks. I think there's going to be a massive catch up in the German stocks against, like, NASDAQ is down, the DAX is up. That's one of the greatest pair trades in the world right now, which is short NASDAQ, long DAX. And you can see this even on a 1-minute chart, that the buy side bias on the German side is so much stronger. And and the beautiful thing is, when we're on the right side of the big bias, of the sort of the bigger trend of the market, this thing just picks the perfect spots. 1, 2, 3, you're in like Flint. We could even, this is the third signal. I guess, no, is it the second? It's the third signal. Why is this? I'm actually interested why, hang on a second. Why is didn't, oh, maybe, oh, because, oh, yeah. I gave it 3 signals, not 2. So it's not showing up. So it probably isn't gonna give us a third buy signal. But certainly the first buy signal, the second buy signal are perfect, and that's kind of really cool. I mean, it's cool that we've been able to finally describe mathematically what we needed to what we see visually all the time. So Dow, NAS continuing, their dilapidated move to the downside. However, if you look at the day, it's at the bottom of the day, right? So we got to see how much. I mean, this was the first half hour opening rally. How much of a kind of a dejection is there? Do investors have any? Do the bulls have any power left? It's really, by the way, fascinating how looking at 1-minute charts, we can get a heartbeat of the broader market and the broader market sentiment so much better, right? Over the last week, you could just see the market just, destroying itself. That all the really good trades have been to the short side. And, look, scalping has obviously 2 values. One is it gives you very small risk and very accurate high frequency trades. But the other thing is it gives you a perspective that you can't get on a bigger chart. You are so intimate with the instrument that you actually have a much better view of the longer term patterns if you can just extrapolate from it than if you were on a bigger chart, because you're so close to the tick by tick, minute by minute price action. And then if you can pull away from that, you can sort of understand, oh yeah, I mean, this is definitely a seller's market or a buyer's market, that kind of stuff. Okay, so let's take a look at currencies just for let's take a euro dollar, and we really can't look at currencies on anything less than a 5-minute chart. I mean, it's really a travesty to look at anything less than that. But on a 5-minute chart, right? On a 5-minute chart, you can see that whether you're using the trend break, and as I said to you, with currencies, they're not like stocks. With currencies, the retrace moves are actually okay. You could use retrace moves on both sides, the shorts and the longs, because they're much more of a two-way market. So with the euro, you could have taken the trend breakdown, right? But very often, this happens all the time in currencies, you don't get the continuation, you get kind of a retrace move here. So first of all, with the euro, you got to trade 2010. I don't think you could get away with anything but less than 20 points, even on a 5-minute chart. So if I'm short here at 1810, right, the thing goes up against me to 1818. I have to give myself at least 20 points of room for a 10-point move, and it eventually goes down all the way over here to doesn't even go. It goes to like 1802, right? 1800. So you would have made pretty much 10, right? Maybe on a 5-minute chart, I could get away with trading like 15 stop, 8 target, right? Somewhere around 60%. Let me just see how much is 8 of how much exactly is 8 divided by 15? It's 53%. So you really have to do 9 divided by 15. Yeah, you're really stretching it. I think with you'd have to go with like a 53-54% bet. So yeah, 8 against 15 is about the maximum you want to stretch out, especially if you have the super tight spreads on 8. If you get the razor spreads on 8, then that's probably what you want to do. But anyways, if you're trading the 5-minute, you get the first orange signal, boom. Here it's really super easy because you're getting a better, higher entry, and you're getting a much better entry. So you're in like Flint. Here's a long side entry over here. So that doesn't really extend a lot, but it nevertheless, I think, gives you just enough juice to probably make bank. It's 22 on the close, and the high here is Oh, really? Is it really? No, hold on a second. Is that just 4 pips here? Yeah. Oh, this is very, very small. You can see, look at this 5-minute chart, 2 hours worth of trading, and it's only 4 pips worth of stuff. I don't know how anybody could trade this stuff. It's so boring. So this, this particular retrace example fails, right? Let me just hang on a second. So there's no confusion. I don't want to do too many of. I want to do just one. Cut this down to one size. Oh, max signals. I want one. Right. Okay. So this is very, very tight moving averages. This is I think pre-Europe. How much of a fall is this? So if I'm long here at 12, what's my deepest drop? 3. So I still survived the 15-point stop. I still survived the 15-point stop. This looks so much worse on the charts than it is in real life because it's such a slow-moving instrument. But yeah, if I have a 15-point stop, I survive it, and I certainly make the trade. So one winner, one loser, one winner, and this is kind of choppy and not clear to me where we would be. I think you would have actually survived this. This is 07. The highest it goes is 15. So you survive this, and it comes back down certainly to like 91. So 3 winners, 1 loser in overnight session on a 5-minute euro dollar chart, which is great. Like you can't complain. You're trading a 55% bet at a 75% rate, and that's great. Not much better that you can do. Let's take a look at the pound, which is always the hardest trade in the world to do. Let's see how that would have. Oops, sorry, I misspelled it. Okay. So again, I'm not clear. I think the pound is also such a jumpy little pair. Pound, I don't know. There's no way you could do. I think the pound you'd have to do 20, 15. I think so. If we did a 15, 8, what's the ratio? 55%. No, 2012, I guess, right? 20 target, 20 stop, 12 target. That would probably be the much more reasonable thing. So if you're long here at 91, right? What's the low over here? 78. You survive the 20 stop, and then you have 12. So winner, loser, winner, loser, winner. So sorry. So what does that get me? And I think this is probably would be a winner. So this is close. 82. What's my low here? Unfortunately, this trade, the irony of the whole thing is that because these are such slow moving markets, that you probably, the other thing I was going to say is, and this is actually a good point. You can't, unless you're trading in, if you're trading in US where you can't have long and short positions, you should trade 2 separate accounts. If you're trading in non-US, then you definitely can trade 2 separate accounts. And what would happen is you would have 1 short trade, 1 long trade on both sides. So what would have happened is that this would have been a winner. This would have been a winner in 2 separate legs. So you have 2 winners, 1 loser, 3 winners, 3 to 1, 3 to 2, 4 to 2. So here, you break even. No, you're not break even. You're actually mildly. That's the thing. You are 4 to 2 at a 55% bet. That basically what that means is you're minus 40 on your losers, and 12 times 4 is 48. You're just mildly 8 pips to the good on the pound, which is okay. The point being is that when you're trading FX, you're going to have 3, 4, 5 instruments. So even if just one instrument is only a 5 pip profit generator for you that day, imagine multiplying that by 5 or 6 different instruments, and you obviously have a much better structure. Just take a look at I don't know. Let's just take a look at euro yen. something, that is also very liquid and very, very wide. Um, Here you only have 3 signals if you're trading the dip trade, and 2 of them are winners. So this is a winner. This would be a winner over here because this move against you would not be enough, and you would make bank over here, and this would be a loser. So 66%. So again, same kind of a thing. Let's if we're trading this with a 20-15 kind of a ratio, or 20-12, excuse me, 20 stop, 12 target, you're 24 to the good, 20 to the bad. And you actually, if you had traded this the day before, you're actually 3 to the good. So three winners, 1 loser, which is really like that's sort of where you want to be, in that sweet spot of 3 winners, 1 loser. You're not always going to get that on every single 24-hour session. But imagine you have like 10 currencies and 7 of them are in that kind of a ratio spread. You are doing very well, because that just really adds up as far as pipages go. Obviously, this is something that only works, in my opinion, on a portfolio automated basis. If you're doing it, currency by currency, and you're just watching various things, you really need to go on larger time frames. And ultimately, what we're going to do is we're going to have a scanner, so it'll be automatically able to pick out for you which charts are picking up. But as I said, everything works much better and really tests much better. The longer the chart you go, the stronger the indicator is. So if I go over here, so like this is a 1-hour chart. And if I'm trading the same kind of volatility, which is 2012, I'm long at 39, and the next candle is 58. So more than enough gives me the 12. So winner. I don't know what the hell this is. This is just a gap open, so it's not really a real genuine move here. Winner, loser. So again, 3 winners, 2 1 loser, and that's like from the 8th of March. So you can see that there's like only 4 trades essentially in a month, but the ratio becomes much better. So it all depends on how you want to trade it, whether you want to trade super frequently, another winner, or whether you want to trade, unfrequently, loser, winner. So now you basically, you've had like 6 or 7 winners against just 2 losers, in a really good ratio, which is still a 75% ratio. Oh, that's interesting. So this is actually, so that's an unusual situation. I'm glad I caught this. So this really should not be a proper signal, because the way we're signaling is it has to, the proper signal here, there's no signal here basically, because this orange candle should not occur, because you have the trend break candle here. Only after that should this be a candle. I'm gonna have to just see if Daniel, we need to just make sure, pick up in logic. So this is not really a right signal. This, on the other hand, is a clean, beautiful signal. And you can see also, by the way, how when you catch, especially like on the longer term trend charts, you just catch one big trend, and it's a massive possibility. This is a short but winning trade, because if you're using this kind of a 2012 structure, which is all you really need, even on the hourly charts, winner. I mean, it really racks up an amazing amount. You've had 3 losers against 11 winners so far, 12 winners, 12 against 4. Again, same kind of a situation. Here you run into a choppy market, and now you're picking up some losers. Although I think even on this tight volatility, if you came in on this, what was this? This is 31. You're able to get out at 12. No, you're not. This is too tight a range. And this is 88. And how much was the low on this thing? 83. Yeah, you're not able to get out of those. Okay, so you're gonna get a bad batch. So here you have a very, you kind of a bad batch here, that turns it back to like a 12-6. Now it's 13, 13-6 on the winning side, 14-6, and it just 15-6. You see how as it, even if it comes in and starts to kill you 2 or 3 trades in a row, it then comes back up and starts generating positive trades. And the whole point is, remember that the real kicker here is when is not just the net positive trades, but the ancillary secondary trade, right? It's that one trade out of 4 out of 5 that captures 2 times risk that really creates the the first trade gives you 12, the second trade gives you 40, and that's a huge difference in terms of success, right? Even all of this, these are all like right now. You just went through a batch of about 8 trades that were all positive before you came to a second negative trade. So you were like 21-6, and now you're 21-7. So again, you're 21 out of 28 is 75%. You're basically continuing at that 75% on a 55% bet. And the more trades you do, the more confidence you get in the idea. So it's it's interesting to point that out. By the way, that takes me all the way back to December, right? So that takes me all the way back to December. So just kind of like if you were to sort of run this, what does that mean? So if we were running a 75% strategy, there was 21 times 12, 252, and then we had 7 times 20, which is 140. So about 112, basically about 120 pips. So it's a small amount of pips, But if the algo is doing all the work, what do you care? It basically works out to like 30 pips a month. But remember, that's just one currency pair. Imagine you have like 10 currency pairs, and each one is contributing 30 to 40 pips a month. Now you have a 400, 500 pip a month structure that is all completely automated. That's the key thing. I mean, obviously, if you want to trade, it's on a manual, and this doesn't include any big trade potential, because the big trade potential could literally double that in just 2 or 3 trades. It turns from 140 or 120 pip budget over 3 months to 250, 300 pip rate of return. So then, that's what makes it so kind of cool and interesting. We actually have, at least I'm looking at my, yeah. Okay, so we have finally a retrace trade setting up. So let's just see if we want to play this. Again, this is very late. Not a trade I love because it's super late in the trend, but we'll give it a shot. Let's see if this is something that we want to participate in. This is what, 41, 42. Let's see if this triggers. I mean, if this triggers as a candle, we'd like to. This is going to be the remnant of a downward trend. You could try. No, I'm not going to trade it. No, not trade. Although it may work. Still not a good looking trade. So no real trade from us on this for a couple reasons. Because you're already very deep in the trend, right? Which is why you always want to take the first trade. Not this is already like 30 candles into the move, right? So it's very tired. It's very vulnerable to this kind of a retrace move over here. Now, what's interesting is that if you do get a move back up here and then a failure again, that second failure on a much later signal is actually not bad. It's not it's not a bad signal. But this wasn't a great signal, and that's why I decided not really worth trading it at all. How's the Dow doing? Dow doesn't even have that. Dow is interesting because Dow might give us. Let's watch the Dow a little bit here, because the Dow might give us a possible signal here. It failed. We went inside. It failed on the outside. I have the Dow. I would try to see if I could maybe trade with a 10-point target here. I have 14. I have 20 seconds or 30. 40 seconds left. So it's it's a long time. And now, unfortunately, Dow is really, really extended in this move. And now it becomes a chase trade, and now I really don't like it because the full potential of the profit. Remember, we want a candle that's no more than, if we're going to risk 20, we don't want a candle that's more than 30 long, and this candle is already 50 long. It's the low on this thing is 7, the high is 58. It's 50 long. It might work for a little bit more for continuation. And it may be worthwhile for like 5-10 points. I mean, you guys can take a gamble, but it's just it makes it a lower probability trade. Although you see it's fully extending. I mean, it's doing well. I don't know if any of you took it. I'm not counting this as a trade because I didn't officially sanction it, but it definitely works. I mean, it worked because we have such a strong negative bias today. Markets are in such a strong sell-off mode that there's enough juice here for continuation. But because the move was so big already on this candle, you can see it's just basically good for just 10 points over here. Anybody take the short here at all or no? Yeah, it wasn't a high probability short. If Karen was here, she'd be taking the short. So not a great trade, but the beautiful thing is you can see with the indicator the setups in a very clean, crisp manner. You can see what's high probability, what's low probability, what's medium, in terms of quality. Let's take a look. I haven't even looked at it. Let's see what the German is doing. No signals here. Although, the German had a really good fit. Oh, that's a 1 hour? Sorry, I'm looking at the wrong thing. German has no signals. It had a very, very, and when you have a strong bias, by the way, the short side signals are going to be tiny. So if you took this kind of a momentum move here, what was that? 96. The lowest it got to was 91. It's like a 5-point move. Kind of died out. So yeah. I mean, definitely the better side to trade the German from is the long side for the most part. Get a little more in the zone here. Now, the other thing that happens, which is I always have this temptation, it's always a sucker bet, is to always trade the reversal trade, which is not a trade that we like to trade, and never a high probability trade, right? It's always a guess, but there's always like a temptation. Oh, look, it's starting to bottom out, it's starting to hold the bottom. You kind of want to buy the dip, and make it worthwhile. I'm not gonna recommend those trades, but the point is that if you are going to bottom fish, you want to bottom fish at these extreme extensions. Extensions when we've already had the reversal signals. The reversal signals have not led to fresh lows, right? And the price is kind of overextended away from the moving average. So just for argument's sake, you could say, well, if this candle doesn't make any new lows, doesn't break the new low ground, I'm gonna just wait. How much time do we have left here? 3 or 4 wait 5 seconds, and if it kind of holds the ground, I may take a dip here for 5, and boom, and you see it, it pops up here for 5-10, super fast, because exactly. what you're seeing is the exhaustion of supply, right? So like if you want to play this game, you can do that. You can do that on the other side with the tools that we have, because at least they give you a higher probability trade than nothing. So I mean, this was fun. Like if you had taken this was a lot of fun to take the reversal. But as I said, they're not high probability trades. But if you're going to take them, this was the area to take them, where you had lots of exhaustion, no break to new lows, and now just a vicious short covering rally, right? Like this was a great pop to get in. Anybody take the pop, or you guys are just kind of watching or doing anything? Nobody wanted to gamble today on the pops? But my bigger point is we have a great trend structure, and if you want to fool around with the reversal structure, this is what you do in the reversal structure. You wait until the absolute most exhaustive point of pain, and only then do you come in. You don't rush your the reversal. I actually understood reversals have to be bought without any confirmation. Like by the time you're looking for that confirmation, you're looking for that green candle, it's too late. It's all the short covering rally is done. You basically have to say, oh, they haven't done fresh lows, fresh highs, and they're full of shit. I'm gonna get underneath here because we've already had lots and lots of move, lots of reversal dip trades. Now I'm willing to take a stand here on a bop. But same kind of a thing here where you've had a reversal trade, you had wicks over here for a couple of candles. I'm willing to take the trade against that, but only after you've had lots of evidence of very, very strong selling or strong buying. So it's just fun to do this, and as you can see, they unwind super fast, right? Because what happens next is here's the basic dynamic of how supply demand works in the prices. So we have trend, then we have small counter trends that get rejected, small counter trends that gets rejected, short covering, exhaustion, short covering, and then probing, chopping back and forth. You very rarely, unless you have news, are you going to get V-shaped moves, right? Which everybody is always hoping when they're buying the reversal, they get a V-shaped move. The V-shaped move is rarer than even the trend itself. Like if trend is kind of a 1 out of 3 chances, this is like 1 out of 5 chances, 1 out of 6 chances. So always buying this this candle in the hope of a V shape always ends to be a suckered bet, unless you have a wide stop and you say, okay, I'm really going to just make a bet that this is a bottom. And even then, you don't necessarily have a high degree of conviction that it is, because they're going to probe it again, maybe even pierce it a little bit more to the downside before they stabilize, and then eventually they're going to turn it. But for us to trade intelligently on the turn, you don't have to rush it. The moving averages will turn. The buyers are going to come in, and you can come in much later after the balance of power has shifted to buyers. Like right now, what's interesting is I'm watching this price action here. So again, they reverse this. They're trying to touch the bottom. It's not a great buy because they're really they're not really rejecting the bottom yet. They're not really running the candle. So I actually be a little bit cautious here. But now I might be able to get long here. Like right here, they kind of held it. Okay, I'm willing to run with this candle. Let's say I'm in at 64. And I think it feels like they're gonna try and see if they can run it back up after the first short squeeze got rejected. Because now comes the second short squeeze, because the buyers have tried the third or the fourth time to broke the low. So now I'm at 74, so I'm plus 10, and it's a nice clean reversal, right? Kind of cool, right? I mean, it's fun to watch this on a micro level because you can really understand all of the key things that are happening, right? That are going on here. In the Dow, it's even clear. In the DAX, it's already sending you a buy signal. So you can just sort of see across all 3 instruments how the price action is going. But coming in now, it's too late already. The easy money was somewhere over here. Now you're in no man's land. And now you're in chop zone. And now you basically have to, if you're making a big positional bet, you have to have a wide stop, because you can be up and down, up and down, up and down, and just be chopped out of any short-term scalp position continuously. So, you got to know when to take your punches, and when to go with them. But yeah, we can do a lot more of those, because now that we have the structure, and now that we have the conditions, we could play around with a reversal setup for you guys at key moments. But in order to trade reversal, we really have to completely absorb trend, which is what we're doing now. And I think that's working really well. Holy shit, we're way over time today, but it was just such an interesting session. So much fun going through all this stuff with you guys. So I hope you all really enjoyed it. And I hope everybody, anybody have any questions, anything else for me? If not, we'll definitely get together for end of day tomorrow, and do this all over again. Thank you, guys. Thanks a lot. Thank you. I hope you guys are all enjoying it. And I feel like I've said this 1,000 times, so I'm not going to jinx myself, but I feel like we're getting close to the end of the product, which means that we can just focus on trading. All right, everybody have a wonderful, wonderful day. I'll see everybody tomorrow. Everybody have a great day. Take care.